Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 1st. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We got a lot of PMI numbers, which is Purchasing Managers Index. Anything above 50 is expansion in the economy. Anything below 50 is contraction in the economy. Across the board, we're getting some preliminary PMI numbers across the pond that isn't their flash estimates, so that is a lagging indicator in a sense. But having said that, like to keep an eye on all of them. They pretty much came in line with expectations. And then we got Great Britain's manufacturing PMI because they don't do the flash. It came in at 53.8, expected to be 52.6, so better than expectations there from the economists. And then back here in the United States, we have Bostic speaking. Also, we had final manufacturing PMI, which is not necessarily our most robust number, but when it comes in the form of ISM, which is the Institute for Manufacturing Purchasing Managers Index, that's the one we look at. That came in at 59.8, expected to be 60.1, so slightly lower than expected there, but again, anything above 50 is expansion in the economy. It didn't really miss by that much. Also, construction spending came in at 0.1%, lower than the expected 0.5%, so a bit of a pullback there. Manufacturing prices paid, lower than expected at 66.9, expected to be 72.0, so we're not really seeing those inflationary numbers there. Finally, we got total vehicle sales throughout the day, so keep your eyes out for that. And we've got Trump speaking probably right about now. All right, crude oil moving higher today, blasting up and really bucking what I had to say. Trying to trade up into the 75 handle. We're trading 74.5 now. We did peel above the 78 Fibonacci or 76 Fibonacci level, and our since kind of straddling right back and forth above and below that 74.5, really 74.75 is really that line in the sand. So we're seeing it bounce back above and below that number as of right now. It's really the settlement we're concerned about. Above that, the bulls are going to be winning and really kind of making my theory fly out the window in the face of that. I was hoping we would see longer term 60s handle in crude oil. We're not really seeing that with crude oil moving higher. So I do have that XOP trade on for the bearish side and not looking too good. So it's long puts. I'm going to hold on to those at least for right now. Gold futures coming off again today. We settled below that 1200 mark. That being said, bulls are going to be really nervous right now. Not a whole lot to see here. Flight to quality in this sense is a flight to the equities. We'll talk about that here in a minute. Bitcoin, nothing to see. Flatlining other than watching a corpse die there. Bonds, pretty much unchanged for the most part. Let's talk about the equities because there's a lot going on in there. We've got the VIX coming off because the equities are moving higher. And as you can see here with the Dow Jones Industrial Average up 240 points, it is screaming to make all-time highs. We are above these Fibonacci levels. This is the 100 extension from the 52-week high. Probably have to adjust that, but I liked it because it seemed to act as a support and resistance in the past. So that being said, that probably could be wiped out at this point. The other thing with bonds with the Dow moving higher, what is the catalyst? We didn't get any great economic data, but one of the things that we did see is that the SEC came out and came up with a ruling on Elon Musk because he came out and said that he secured lending to take the company private at $420 a share. That hurt the investor that was short that. So they fined him $20 million. Today's advancement is upwards of $200 million. So that fine really doesn't hurt when you get smacked on the wrist and you get 10 times those 10 times that money back in return on the news. All right, E-mini S&Ps up about 18 points, just slightly there above. As you can see, overnight inventory got long. Not a whole lot of attempt to flush that out, but right now we're just kind of discerning where we're going to go. Right now, I look at it as a rising tide lifts all ships with this Tesla trade. Before we get into that Tesla trade, let's talk about the trade that I've done, which is in Facebook. I went in the October and sold the 155 puts in there for 99 cents. So obviously I'm making a move down right now, but we're right there at that value area low where I think it's going to find some support. It's just getting overextended to the downside. I think that they're just overdone. So I did that in the October because it doesn't have the earnings. You can see I don't have a whole lot of days left in this, but those 155 puts are at a good level right here. I think that I'm going to be safe for that being below that value area low. That being said, volatility should continue to come out of this as we enter closer to expiration on this particular underlying. Now, Tesla, this is what I was talking about. You know, on Friday we were slammed down. I covered my short calls in there. Luckily so, because we are like $20 higher, or $40 higher, I'm sorry, today, back to where we were the previous day that the SEC said that they were going to slap him on the wrist. Everybody thought it'd be a little bit worse than that. But this market gain on the stock is like $200 million or something like that, I heard. And they're finding him $20 million. So the broader market, is it rallying because investors are like, hey, all of these guys can lie and say whatever they want as long as the lie is better than what we are going to get fined for. So if the SEC, if I can make, $50 million on something when the SEC is going to come in and fine me $100,000 or $100, why wouldn't somebody do that? They're sending the wrong message is what I'm saying here. And anyway, it's bringing up the broader markets. That being said, that's my little soapbox on this little saga that we have with Tesla. And that's about it. Check out Thursday's webinar on the long call spread. We're going to be doing long put spread, so I hope everybody's getting something from that. Go to protraderstrategies.com. We're specifically talking about volatility with these and how volatility affects the different options. I'm so sick and tired of listening to mainstream media talk about options and not really talk about this most important Greek that is the thing that determines what our option strategy is. And some of those guys on mainstream media don't even understand it as well. All right, so go to protraderstrategies.com and sign up for that. Give me a thumbs up, thumbs down, like or dislike on this video. If you give me a thumbs down, let me know what the hell I'm doing wrong, all right? Anyway, if you can't take that, take it easy.